Thanks for tuning in to Bloomberg Quint. China Mobile's tender for more than 105 million kilometers has turned out to be bad news for global optic fiber companies because of the pricing. Sterlite Tech is no different. The wires were offered at a far lower price than the bid, and this comes at a time when a lot of companies, including Sterlite Tech, are ramping up capacity. The stock's been under pressure over the last couple of trading sessions. So, is there a plan B, and how severe could this impact be for companies at large and for Sterlite Tech? Let's get the Group CEO Anand Agarwal to talk about this. Anand, good having you. Thanks much for joining in. Just wondering, firstly, the nature of the business as well. A lot of people have been taken by surprise at one tender resulting in such a sharp drop in optic fiber cable prices. It came as a bit of a surprise. Is this normal practice, or is it because China Mobile is such a large player, then they can dictate terms and set prices for a period of time?
Yeah, Neeraj, thank you for having me. Clearly, this event which has happened is a local event related to China Mobile. You rightly said China Mobile is one of the largest buyers of fiber globally. And in this case, what had happened was that the tender got delayed by 3 months from what it was expected. And I believe some of the manufacturers in China had created capacities and stocks anticipating that. So we believe this is a local one-off event which has impacted prices in China. But for us, we are a pretty global company. China is less than 5% of our revenues. So the impact that comes to us because of China revenues is minimal. And the fact that the global pricing is actually not getting impacted. So all our long-term global contracts are not showing any significant adverse pricing. So we believe this sort of reaction, especially coming in from the markets, is a bit more panicky than the situation at all is.
Okay, I just want to get clarity on this. Two pieces of information, Anand. Firstly, the contracts that you've entered in, which you mentioned, long-term global contracts, you are saying none of those clients would look at the new pricing that China Mobile has gotten for its contracts and ask for a downward revision of the prices in the existing contracts. The contracts, do the contracts have such a clause which speaks about the prevailing price having a bearing on the long-term price? And if so, have they tried to renegotiate prices?
So clearly, our contracts are annual contracts, so the price have a flexibility of plus minus 10% within a range. So whenever the contract comes next for renegotiation, which typically would be, say, either at the end of first half of 2019 or towards the end of 2019, we will review the situation. But clearly, none of our current contracts are undergoing that repricing provision. Because as I said, this is a local event of China. The global pricing or supply-demand situation is not impacted. So if you see any of the other global manufacturers in the world, whether it is Corning, whether it is Prysmian, none of them are talking about this impact at all. It's a localized event related to one particular tender, which has created this apparent panic situation.
Okay, fine. It's a bit of a difficult market to understand and opaque to figure out what the optic fiber prices are as well, and therefore this clarity really helps. Just wondering, so are you saying that after this tender pricing that happened, and you use the term localized twice, therefore my question to you, the global optic fiber prices in the last 4 or 5 sessions, ever since this tender opened up, have they seen a substantial downward revision, or are they still at the prices as they were before the China Mobile tender opened?
Neeraj, this market is not like a live trading market for fiber. So you normally have this optical fiber is an extremely critical part of the overall data networks which get created. And our customers don't react to dynamic pricing based on any tender opening up. So our customers, whoever they are, everyone is aware of the pricing situation in China Mobile, considering they are a big operator. But nobody is coming back asking for any revision in terms of pricing. We are sure that towards the end of the year, we will again see the supply-demand scenario. But at least at a current level, we don't, as a company, we have never done business on spot pricing either way. So even in a supply-demand scenario when supply was tight, we were not going out and looking for contracts which were on spot, maybe trading higher than what contractual prices were. So there would be some impact, but it is not significant on two counts. I mean, China itself is not a strong part of our overall business. Second is, as a company also, we are pretty diversified. So we have now the overall services that we do is closer to 35% of our overall revenues, 50% of our order book. So we are not also dependent on fiber being the only business either. So we have 3-4 different levels of capability, which are all showing up as we move into the current situation.
Okay. Yeah, I was actually going to come to Sterlite Tech in just moments from now, but and I will do that. I just had one small question on the global front before we just ask a couple of questions about your company too. Anand, one of the fears that one of the analysts expressed to us, his fears, of course, is that according to that equity house, this lower pricing is a resultant factor of there being higher supply and maybe lower demand. This was a very simple, plain vanilla estimate or thought that he gave. And if indeed this supply in China is higher, and if they go ahead and export optic fiber cables to the rest of the world, then if not now, then over the course of the next couple of months, there could be further pressure on the existing optic fiber prices across the world as well. Is that a legitimate fear?
In a theoretical sense, maybe. But again, optical fiber is not a commodity which is sold across just by supply-demand dynamics. Most of the global telecom providers take between 1 year to 3 years to approve a new vendor. And as I've been maintaining, we are not seeing any global supply-demand dynamic shifting. In fact, we continue to be bullish, and both our capacity expansion of taking optical fiber to 50 million kilometers and cable to 33 million kilometers, we are going fully on track, because in a macro sense, we continue to be extremely bullish and committed towards this business.
Interesting. Okay, so then the company specific question, the 3 houses which have come out with notes on this, mention in different or varied ways. The numbers may vary a little bit, but I'll just quote one of the notes which suggests that they believe that Sterlite Tech's realized pricing would decline about 20 to 25% YOY in FY20, and that will have a negative impact on margins as well. Just plain vanilla. I know your margins get buffered up by the other business too, but is this expectation or is this estimate slightly on the wrong side?
I think it is overreaction. It is essentially seeing the results of one tender and extrapolating it to the entire volume. So that I think is more overreaction for applying what was happening in China and trying to apply it to our volumes. Clearly, it's not something that is happening to us.
So you don't reckon it will be a 20-25% cut? If at all, the cut could be the tune of what, 10% maybe, or slightly.
In the worst case, it could be of that order.
In the worst case, about 10%. So okay, it's not as much of a worry. So I'm guessing, Anand, that just one question on this, and I wouldn't want you to extrapolate really, but you're not changing your guidance which you had given until FY20. I know FY21 is fluid, but FY20, I still remember $100 million of bottom line and the revenue growth of 30-35%. You're not going back on that as things stand right now?
No, we are not. We continue to stick to our guidance.
Okay, great. That's a good news. Just one last question, Anand, and we can get a chance to talk about when the matter was at its peak, and therefore I have to ask you, the whole pledge share thing that came about. Now there are multiple views that came to us. Now that we have had time to digest, there is a view which comes in that because of all of that has happened, and Sterlite Tech is a company not directly related to the transaction, because the stocks were pledged for those transactions of Vulcan. the resultant move might actually result in the pledges going down for Sterlite Tech. Is that a legitimate assumption? And if that were to be the case, how soon do you expect the pledges, whatever the number would be, 96%, 90% as the case may be, how soon do you expect those pledges to come off? Would you be able to comment on that?
I mean, for the first part, clearly the pledges, there is zero risk of the any pricing on the pledges. It gets tested every quarter, and the testing was done on 28th of February, and everything was fine. And we believe that the pledges will be off the company's books very soon, in the matter of next few weeks, if not a week.
Okay, we appreciate this clarity, Anand Agarwal. Thank you so much for taking the time out and speaking to us at Bloomberg Quint. Appreciate your time.
Sure, thanks.
That's the view from Anand Agarwal of Sterlite Tech. I think some important mentions from the management. They say that they believe that this estimates or lowering of estimates from the brokerage community is a bit of an overreaction. At the worst case, as things stands, and I quote him, he said that the downtick in the realizations would be to the tune of 10%. Well, that's the management for you. The stock, though, still under pressure. Let's see when does it stabilize. Thanks so much for tuning in to Bloomberg Quint.